What if I told you that the simplest investing strategy in America is also one of the most powerful? That everyday people, regular workers, teachers, nurses, office employees, young professionals, even people who know almost nothing about the stock market, have used one extremely easy system to build wealth quietly for decades? It's not crypto. It's not day trading. It's not buying random penny stocks. And no, you don't need to stare at charts all day or study complicated financial theories. It's something so simple that many wealthy people don't even want to talk about it because it removes the mystery and makes getting rich feel almost boring. It's called the three-fund portfolio, and today we're breaking down what it is, how lazy Americans use it to grow their wealth automatically, and why this strategy keeps outperforming fancy investors who try to beat the market.
Hi there. Before we dive in, please take a moment to read the full disclaimer on the screen.
By the end of this video, you'll know exactly how it works, why it's so effective, and whether it might be the system you decide to use for your own financial future. Before we go deeper, let me ask you a question. If you could grow your money without doing constant research, without timing the market, and without needing expert knowledge, would you do it? Drop your answer in the comments, yes or no, and why. All right, let's get into the heart of this. The three-fund portfolio is built on one simple idea. When you own almost everything, you don't need to guess anything. You're not betting on a single company, a single industry, or a single trend. You're buying a slice of entire economies. You're buying the long-term growth of millions of workers, thousands of companies, and decades of innovation. That's what makes this strategy so powerful. So, why do so many Americans call this the lazy way to get rich? Because once it's set up, there is nothing to do. It grows on its own. It's like planting 3 trees that keep producing fruit year after year without you watering them, feeding them, or trimming them. You simply plant them and let nature, or in this case, the market, do the work. Now, the 3 funds are simple. A total U.S. stock market fund, a total international stock market fund, a total bond market fund. These 3 things cover almost the entire investing universe. Together, they create something balanced, strong, and extremely hard to beat long-term. But let's break down why each part matters, because this is where people often get confused. First, the total U.S. stock market fund. This gives you ownership in thousands of American companies, big ones like Apple, Amazon, Tesla, and Google, but also medium-sized and smaller companies you've never heard of. Instead of trying to pick the next big winner, you own all of them at once. One fails, no problem. Another rises, you benefit. It's the simplest way to ride the growth of the world's most powerful economy. Second, the total international fund. Believe it or not, the U.S. is not the only place making money. Countries like Japan, Germany, India, China, Canada, Australia, and many more all have huge companies growing and competing globally. By owning a broad international fund, you benefit from growth happening everywhere, not just in America. Some decades the U.S. performs better, some decades international markets shine. Owning both means you never miss out on global growth. Third, the total bond market fund. This is the safety layer. Bonds tend to be calmer than stocks. They don't grow as fast, but they don't fall as hard either. When stocks go down, bonds often help stabilize your portfolio. It's the financial equivalent of a seatbelt. You hope you don't need it, but you'll be grateful it's there when the ride gets bumpy. Nowhere in this system are you trying to guess what stock is hot this year. You're not checking charts for patterns or watching the news every day for trading signals. In fact, one of the biggest advantages of the 3-fund portfolio is that it helps you avoid emotional investing. No panic selling, no fear of missing out, no stress. So why does it work so well? Because it follows long-term market behavior, not short-term noise. Over decades, markets rise. There are ups and downs, but the general direction over long periods is upward. Every crash in history has eventually reversed. Every downturn has eventually recovered. The 3-fund portfolio simply rides those waves, calmly, and consistently. Meanwhile, most people who try to beat the market by trading often end up doing worse. They buy high, sell low, panic at the wrong time, get greedy at the wrong time, or chase trends that disappear overnight. Studies show that even professional investors struggle to beat simple index funds over long periods. So here's a question for you. If you knew that a simple strategy could outperform the majority of expert investors, would you still try to time the market? Or would you choose the easy, steady path? Leave your thoughts in the comments. Your perspective might help someone else watching this video. But let's talk about something important. How Americans actually use this strategy in real life. Many people automate everything. They set up automatic contributions every month or every paycheck, and the money gets invested directly into these three funds. No thinking, no analysis, no stress. They don't obsess over the news. They don't panic when the market dips. They don't celebrate too hard when it surges. They simply trust the long-term trend. This is what makes the strategy so lazy. Not because it's careless, but because it requires little effort. Most people using this approach check their investments maybe a couple of times a year. They don't worry about inflation reports, interest rate decisions, or political drama. They don't chase hype. They don't buy complicated financial products. They stick to three funds, just three, and they end up building long-term wealth. So let me ask you, do you think you'd be more successful with your money if you removed emotion from the process? Would investing automatically help you avoid self-sabotage? Share your answer below. Of course, nothing is perfect. The stock market can and does go down, sometimes sharply. Bonds can lose value too. But the reason the three-fund portfolio works is because it is built to survive decades, not days. You're not investing for next month. You're investing for the next 10, 20, 30, even 40 years. The long-term trend of global markets has been upward thanks to innovation, technology, productivity, and economic growth. You're betting on humanity moving forward. And historically, that has been a pretty good bet. Another reason this strategy is so popular? It's cheap. Index funds have very low fees. Many Americans don't realize that high-fee investments quietly eat into their returns. Even a 1% fee can cost you tens of thousands of dollars over decades. But total market index funds and bond index funds often cost almost nothing. That means more of your money stays in your pocket, growing for you, not paying someone else. Now, if you're watching this thinking, okay, this sounds great, but how do people decide how much to put in each fund? You're not alone. Different people use different ratios. Some prefer 60% stocks, 40% bonds. Others do 80% stocks, 20% bonds. Some even go 90% stocks and 10% bonds if they're young and want higher long-term growth. There's no perfect answer. It depends on your age, risk tolerance, goals, and personality. Are you someone who panics easily? Bonds might help you sleep at night. Are you young with a long investing horizon? More stocks might make sense. Here's a question for you. If you had to choose a portfolio for yourself right now, what percentage would you put in stocks versus bonds? Think about your personality and goals, then drop your answer in the comments. Now let's address one more important point. If this strategy is so simple and so effective, why doesn't everyone use it? Truth is, humans love complexity. People think that if something is simple, it can't be powerful. They want secret formulas and magic strategies. They want to feel like they're doing something unique. But simplicity is often the most powerful approach, especially in investing. The three-fund portfolio removes the noise. It removes the guessing. It removes the feeling that you need to beat the market to win. Instead, it lets you be the market. And historically, the market wins. Before we wrap up, if you're getting value from this video, take a second right now to like, subscribe, and share it with someone who wants to build wealth but feels overwhelmed by complicated financial advice. If you're enjoying this content, supporting the channel helps us keep making videos like this. Now, back to the final idea I want you to think about. We live in a time where financial stress is everywhere. People are working harder than ever, but many still feel behind. The idea that you need to pick perfect stocks, buy at the right time, sell at the right moment, follow gurus, or predict the future only adds more stress. The three-fund portfolio is the opposite. It says, you don't need to be perfect. You don't need to predict anything. Just trust long-term global progress. It's not a get-rich-quick scheme. It's a get-rich-eventually method. And for millions of people, that's exactly what they needed. So here's the final question I want to leave you with today. Do you believe that building wealth should be simple or complicated? And which approach do you think will actually help you stay consistent over the next 20 or 30 years? Leave your answer below. Your insight might really inspire someone else watching. Thanks for staying until the end. If you want more videos that break down money, wealth, and investing in simple language, make sure to subscribe and turn on notifications so you never miss out. And if you found this helpful, share it with someone who needs a clear, stress-free path to growing their money. See you in the next one.